C3.ai is one of the more exciting companies in the stock market today. The company is developing and offering enterprise and institutions services that implement artificial intelligence to improve operations, reduce costs, increase revenue, whatever you might need to do in your business strategically using artificial intelligence. C3.ai tries to offer you specific services for your business right now. They're in the process of offering pilot programs of their newest AI offering, and management is hopeful that this new service is going to attract a lot of clients. Now, it's too early to tell just how much demand that's going to create, but management is optimistic about its prospects. So, with that being said, where could C3.ai's valuation go in the next year? Where will its stock price be in 1 year? Well, that's the question I aim to answer in this video. So let's jump right in and make these assumptions, estimations, and calculations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, to make this prediction, I'm going to need some estimates. And first, I'm going to need C3.ai's fiscal year 2024 revenue estimate. And according to Wall Street analysts that are following C3.ai stock, they think it's going to generate 366.61 million in revenue in fiscal year 2024, which for C3.ai ends in April of 2025. Yeah, you heard me right. There's a lot of companies that have fiscal years that end on a different date than December 31st. So in other words, they have a fiscal year that's not in accordance with the calendar year. It's confusing. It's annoying. I don't know why it's still allowed, but it is, and it is what it is. And so we must follow what we're given, and this is how it is. Some companies like C3.ai have a fiscal year that ends on a different date. So it makes it hard to compare with other companies that end on December 31st. So we won't try to do that in this video. We'll just take this figure as it's given. All right. Another thing I'm going to need is the company's current enterprise value. Now, the enterprise value is a little different than the market capitalization. It takes into account the company's debt and the company's cash on the balance sheet, short and long-term debt, and comes up with the valuation for the entire enterprise. And according to what it's trading at today, as of this recording, the enterprise value is 2.4 billion. I also need C3.ai's EV to revenue. I need to know the multiple of revenue that they're trading at on the EV. And as of this recording, they're trading at an EV to revenue multiple of 8.455. If its revenue does come in at 366 million in 2024 and the EV to revenue stays the same at 8.45, its enterprise value could come in at 3.1 billion by the end of 2024. Now, that might seem like a lot, but I want you to consider the total addressable market opportunity for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. So now that you have an idea of how large that market could be, you can understand why investor optimism for C3.ai could be large. But at the same time, the company is currently at a market enterprise value of 2.4 billion. So if it does come in at 3.01 billion, that would be an increase of roughly 700 million in market value, or about 25%. I think that's a little much. I think the EV to revenue is going to be a little bit lower, somewhere between 6 and 8.45. So let's look at the lower EV to revenue multiples. At 6, it could have an enterprise value of 2.2 billion. At 4, it could be 1.4 billion, which would be a significant decrease. And at an EV to revenue of 2, the estimated enterprise value could fall to 732 million. Now, if you want to talk about some of the factors that could cause its EV to revenue to increase, one of them would be C3.ai's cash flow from operations. You can see recently C3.ai has turned things around according to this metric. Instead of continuously falling, C3.ai is making progress to turning this positive. If this continues and it turns positive by the end of 2024, then investors would be willing to pay a higher price for C3.ai because the company is demonstrating positive cash flow from operations. Similarly, its operating income is heading straight downward. If C3.ai can turn this around and start moving it in the right direction by the end of 2024, making meaningful progress, then investors would be willing to pay a higher EV to revenue for C3.ai. You can see this metric moving downward, negative 298.81 million in the last trailing 12-month update. So if C3.ai can make progress on this front and move higher, that will be positive as well. And finally, I mentioned at the beginning of this video that C3.ai has launched a new AI service that it's piloting with several enterprises and institutions right now. If they receive many orders and a lot of billions worth of contracts or hundreds of millions worth of contracts for their new service, that will be a significant positive factor for C3.ai revenue going forward. Even if those contracts don't get started in the beginning or middle of the year, if they secure these contracts, investors will get enthusiastic about C3.ai stock and its long-term prospects. Given the massive opportunity in the AI space, if C3.ai demonstrates that it's making progress in that industry, then investors would be more willing to pay for C3.ai stock. So my best estimate for where I think it will be in terms of market enterprise value would be somewhere between 2.2 billion, as is this case here with the EV to revenue at 6, and 2.4 billion. And I understand that's not an increase from where it is now, or much of an increase from where it is now. And because I think it's going to be slower for C3.ai to gain traction in signing these contracts and improving its operating profitability. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.